set off and carry forward. We will have a brief introduction about set off and carry forward. Income tax is levied on the total income of the previous year of an assessee. Hence, it is necessary to ascertain his total income. Sometimes, an assessee may incur loss from particular source of income, and unless such loss is set off against other income, the net result of the assessee activities during a particular accounting year cannot be ascertained, and consequently the tax payable also cannot be determined. For this purpose, the Income Tax Act contains specific provisions, section 70 to 80, for set off and carry forward of losses. Then scheme of set off and carry forward and set off. The procedure of set off and carry forward and set off operates as follows, subject to the condition as prescribed. First one, intra-head or inter-source set off, then inter-head set off, carry forward of unadjusted losses, then fourth one, order of set off. Then set off losses mean we'll have a discussion now. Inter-head or inter-source set off, that is, set off a loss against income from any sources under the same head, section 70. If there is more than one source of income under any head, the loss from one or more source can be set off against the income from any other sources under the same head. For example, loss from self-occupied house, that is, loss from self-occupied house under the head house property can be set off against income from another let out house. Similarly, loss of one specific business under the head profit and gain from business or profession can be set off against any other business income. Short-term capital loss can be set off against any capital gain under the head other sources. Loss from an activity can be set off against any income. Exception. There are some exceptions to the provisions as regard intra-head set off as under. First one, loss from speculation business. Income from speculation business is computed under the head income from business or profession. But if there is any loss from speculation business, it cannot be set off against the income from other business or profession. It can be set off only against the profit in a speculation business. However, the loss of non-speculation business can be set off against income from speculation business. Loss from specified business under section 35 AD. Any loss from specified business such as gold chain facilities, warehousing business, etc. can be set off against other specified business only and not against any other business income. Second one, long-term capital loss. From the assessment year 2003-04, long-term capital loss can be set off only against long-term capital gain. Short-term capital loss can be set off against short-term or long-term capital gain. Third one, loss from the activity of owning and maintaining racehorses. Loss from the activity of owning and maintaining racehorse can only be set off against profit from the activity of owning and maintaining racehorse and not against profit of any other business. However, profit from the activity of running and maintaining race horses can be used to set off loss from any other business. Thus, loss from the activity of owning and maintaining race horse can be set off against the income from any other sources under the head income from other sources. Then fourth one, no loss can be set off against winning from lotteries, crossword puzzles, card games, etc. No expenditure is allowed from these sources. Similarly, no loss from lottery, card games, races, etc. is allowed to be set off from the income of winning of lotteries, crossword puzzles, card games, races, etc. Besides, loss of any other source falling under the head income from other sources is not allowed to be set off against the income of winning from lotteries, crossword puzzles, races, etc. Similarly, any other head loss cannot be set off against casual income. In other words, casual incomes cannot be used to set off loss from any other sources. Any casual loss such as gambling loss, betting loss, and expenditure on lottery tickets or any other casual loss is ignored. Then fifth one, loss from a source which is exempt. Loss incurred from a source, income from which is exempt, cannot be set off against income from a taxable source. Then inter-head set off or set off against income under other heads. Section 71. Procedure of set off. If the amount of loss from any sources under any head of income cannot be set off against income from any other sources under the same head, either because of absence or inadequacy of income from other sources under that head, then such unadjusted loss can be set off against income under any other head. Thus, loss from a house property, if it cannot be set off against income from other house property, can be set off against income from salary, business, capital gain, or income from other sources. Business loss can be set off against property income, capital gain, or other income. A loss under the head income from other source can be set off against salary income, property income, business income, or capital gain. Exception to inter-head set off. There are 7 exceptions to the provision as regard inter-head set off as discussed below. Loss under the head house property. Loss under the head income from house property can be set off against other head up to 2 lakhs. Loss under the head business. Loss under the head business and profession cannot be set off against salary income. Loss under the head capital gain. The provision in respect of loss under capital gain may be summarized as under. Loss under the head capital gain. Loss under the head capital gain can be set off against income under the capital gain. Only it cannot be set off against income under any other head. Long-term capital loss can be set off only against long-term capital gain, whereas short-term capital loss can be set off against short-term capital gain or long-term capital gain.